Good day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday, September 5th, 2023. And the time right now, well, 5:55 p.m. Central Time. So today, just look at the dollar. Up 57 points, 104.76. I don't have to tell you anything else with metals. If you don't get it, shame on you. What have I been preaching to you and teaching you here? In this environment right now, and environments are everything. In this environment, higher interest rates, and we certainly have those, and while they bounced a little tonight, you're talking of cracking the 110 level in the note market. We're back up to key big numbers in the 2-year, the 10-year. Market's paying big attention to what's going on because the rates are going up. Dollar higher, that's the headwind here of all the metal markets. Now, the copper market was interesting in the sense that over the weekend, China did make moves. We saw that in Shanghai and Beijing, home sales were double the previous week because they made changes to the down payment rule. And if you've had a mortgage, you paid it off, and you don't own a property right now that's mortgaged, you can apply for a mortgage. And when you get that, away you go. Now, I don't know if the property part, if I'm saying is right or not. I keep trying to read the rules and I'm not fully understanding them, and I've read them over and over. I don't know that they're yet allowing an owner who even owns their own home to go out and get a new mortgage on a second home. That's the question. Is it primary or not? They should make it's whatever he wants to do if he's paid off a mortgage. That way they're not getting the market going overheating. But it's China. You don't know what they'll do or not. At first, it spurred over the weekend. All stock indices went up and gave it all up as the market started thinking about it and realizing what I'm saying. They dance around the edges, and that's it. Country Gardens, they were able to, number one, make a payment. This is very important. They owed only $22 million. Now, I say only. To all of us, that's a lot of money. But when you were $1 billion company plus, and all you owed was $22 billion that you had to make a payment on, it's not a lot of money. Yet, they did go into a technical what? Default. On August 7th, they weren't able to pay that money. They paid, there were two of these type of notes due. They paid them both today. So they're out of that. They have gotten 3 years of creative financing from many of their lenders. So they're trying to get themselves going. The key is getting people to buy the homes and getting more done. They delivered in the first half of the year. To give you an example, I think they said 288,000 new facilities. A year ago, they did nearly 800,000. So their numbers are way down, and how they'll make money and pay things back is improvement. But getting 3 years of time does wonders for your balance sheet. Okay. So in the gold market, as I said, I think the big problem you're facing is higher interest rates and a strong dollar. I don't see anything going to change that right away. What we did is on a weekly chart of closes only. If you'll recall, as we were coming up, I said, watch this. This is your first challenge of that 18-week. And if the market's going to fail, that's the general zone that I look for the failure. And so far, you're down for the week 0.79% into the opening right now. You can see how the market rallied back here. We had talked about this. Remember, I took my arm out like I'm an archer. I'm no archer. But I pulled on it and I said, let go of it, and you get your reaction. You typically go a third to half of the reaction down, get a bounce, and then the market has to decide what's it going to do. And that's right where it's at. It's got to decide what the heck does it want to do. In terms of the swing line study, you have a clear pattern of higher lows. Do you? Well, it's this one and this one. I can't do that. Let me show you something that did happen that's ugly on the chart. I know a lot of you took advantage of what we'll call our sale, Labor Day sale. It was one of the most successful sales we had, by the way, period. And it was great. A lot of you bought the courses. This is an outside week up, outside day up. I said it wrong. Outside day to the upside. That took place on Friday. What you don't want to take out is the low of Friday. That's what I teach. If that happens until you take out the high of Friday, and you took it out, the market could be headed back to what? The closest main moving average, right here. So I wouldn't be surprised if 1944 thereabouts is the next target before it gets over that number. Where else did the market fail? Because I teach you this in the full charting course. Your first challenge of the 200-day average. You hadn't been there for a while, came back, and that's the number you failed against with combination, the Bollinger Band. For those of you that bought the enhanced Bollinger Band course, this is classic what I teach. I mean, this is the textbook. I don't create it. It's exactly it. The first challenge of a major moving average, the Bollinger Band, overbought, not embedded. That's where the pros step out of the market. Take the course. Then we get to the gold-silver ratio, and as you could see, suddenly you're back over this number. So what's going on here? Well, the higher the numbers go over this 84, 86, it's how many ounces of silver in a perfect world, no commission. You put it in a shopping cart, your 1 ounces. You walk it down to the guy that's going to give you an ounce of gold, no commission again. He wants right now from you 81.71 ounces. We'll shave that ounce and get it there, and I will give you an ounce of gold. So the higher it goes, what? It means silver's not worth as much. And when you get over that 18-week average, that's what you're looking to see. Do you have bullish or bearish bias? Today, the market said the bears are fighting to take control again, which means silver should lose to the gold. And here is the silver all the way back down. Now, in all fairness, you had a lost embedded reading. So let's take a look at this one time. Here is the market, and you've got your, take a look here. Okay, so both numbers not over 80, both over 80, both over 80, both over 80. If you lose the red under 79, I'm looking for, when that happens, the closest moving averages. Well, now you're coming down, and look what you go right to. I mean, it doesn't take a genius to see that, and boom, away you go. This is the spot where you step out. So the money's been made off of that. That does not mean the market has to crash further. Certainly it's in a downtrend, but to go short here at 23.96, where would you put a stop? If you believe in putting a stop over the most recent high, you're going to put one over 25.02 and risk from this current level, $1.06. Whoa, that's an awful lot of money to risk. Doesn't mean the market can't go lower. The easy money was made on the lost momentum. Copper's void of a trend. Overbought, never did embed, caught in the sideways action of the Bollinger Band, spinning around, not doing much. And here, another one of these classic cases that I teach in that course. Shame on you if you didn't take advantage of the 40% off, and boom. But guess what? 40% shouldn't stop you from learning how to do this. And all the signal came in on the close of business right here. Watch. Here you go, Friday. If you take a look, what did the market do? Kaboom. This market should now be saying what? Big problem. Huge problem. Take a look. Why is this market going to come down? Because it lost the embedded reading, and you go right to that 18-day average. I'm going to write our developers. It used to be, before I moved to this newer version of the charting, that brown line didn't draw ahead of the current bar. I'm sure it can be fixed. I will talk to them about that. Last, in the dollar index, we have higher lows, higher highs, and take a look at this. The market is overbought. So what do you do when you get up to a Bollinger Band and you're overbought? I think the smart money says, bye-bye, I'm going to walk away, take some money off the table. Either it embeds and you get back in, or you walk away, and when the market works out of the overbought condition, you take another look at it. That's what I think they're saying to themselves. One of the things you might want to say to yourself is, he's throwing around an awful lot of terms. How do I learn what these terms are, and how do I work with them? Well, this is our guide to technical indicators. 2 volumes for you. They're PDFs. We email them to you. The different types of charts, bar charts, candlestick, all the different types, pie charts, everything you can imagine, the different types of moving averages. What you see me using here are simple. Then stochastics, MACD, the different oscillators, spreads, the stories they tell you, price time. This is the Rune Indicator, the free course that I have on our website, by the way. Ag primers, if you need those. Money management. If you think money management isn't important, it's not just saying I can't afford to lose this. It's how do you go in? Is the trade a good one where you want to go heavier with the trade, weaker one? How do you recognize that? How do you pyramid? How do you put things together? We cover it in all this. So how do you get all this? It's really simple. All you do is go to our website at iraepstein.com. And when you are there it is, go to free offers. You can also move your indicator, if you will, your cursor. I got my little thing right here to the top here if you're on a PC, and it will take you right there by giving it a click. I'm Ira. You have a good day. I'll see you tomorrow.